as John Lee takes over the helm, how are you assessing Hong Kong's economy? How much pressure is growth under right now?
Hong Kong's economy started the year extremely weak because of the COVID situation and the restrictions. It came out of that in April, May. We're starting to see already a little bit of headwinds. Of course, the fairly weak China economy doesn't help. So we're looking at a modest overall growth rate this year for the year as a whole. Next year, it should be a bit better. Hong Kong is still a little bit off the level of the economy that it was in 2019, which is among the weaker situations in the region. So Hong Kong still has quite a bit to go before it can really come out of this COVID-induced weakness.
We've seen a rebound in consumption in Hong Kong as it eases those COVID restrictions. Is that sustainable, you think?
I think it is somewhat sustainable. Of course, the April numbers were probably influenced by the consumption voucher distribution, and we're going to have another one, which should help. It is probably necessary to have these vouchers in the sense that consumer sentiment is still a bit hampered by the COVID situation and the uncertainty. There is uncertainty at quite a few levels. So the recovery is still a little unbalanced, slightly fragile. We saw that as well in the May retail sales numbers, which were weaker than the April ones.
Inflation's not an issue here, Lewis, and of course we've got the Hong Kong peg to the US dollar. HKMA raising rates here as well. And now tell me, there's a lot of slack in this economy. How does that play into how you view things? And of course, the overarching thing is its position as a financial hub under question given the quarantine regulations.
Yeah, I think there has been a little bit of a discussion recently about the peg again. There were some comments made by policymakers, regulators, about stress testing the peg in the case of U.S. sanctions or things like that. I personally think that the Hong Kong peg has served the economy very well, and I don't think the authorities are interested in making any move on that unless they really, really have to on, say, the sanctions front. So I think the peg is a very stable arrangement. It has served the economy well. Hong Kong continues to benefit from it as it wants to continue to be that financial hub. So I would say the peg is something very important to Hong Kong that is especially important in that financial realm as a hub function.
Louis, just pivoting to China now. I mean, this first half, particularly the last quarter, has got to be weak here. And we had Xi Jinping saying that they will meet their targets for growth. Is that really possible in your view?
I think the Chinese authorities have a pretty good track record overall of meeting their growth targets. Things changed a bit during COVID, right? And I think that the authorities themselves basically see COVID as a legitimate reason to miss growth targets. We saw in 2020 that they chose for the COVID containment rather than growth. And we see that again, I think this year, is Xi Jinping's own comments are a little bit in line with that we have to prioritize health and COVID, the fight against COVID. I personally think it's going to be extremely hard to get close to the around 5.5% growth target this year.
What do you make of yuan weakness? Do you think the PBOC is comfortable with where the yuan is right now?
I think they're okay with it in terms of the level. Actually, the yuan is not that weak if you look either at its straight weighted exchange rate or if you look at how it moved against the dollar compared to how other currencies move. What they don't like, and many central banks would not like, what they don't like is a rapid change. So like a very strong slide. So I think for now they're okay with where it is, but they wouldn't want to see a rapid depreciation, for instance.